The age-old debate: stocks versus real estate. This topic has intrigued investors for decades, each side presenting compelling arguments for their preferred investment vehicle. The world of investing is often presented as a two-horse race: stocks versus real estate. Both have their unique advantages and potential pitfalls, making the choice a challenging one for many. Both offer the potential for significant returns, but which one is the better investment? Stocks can provide rapid growth, while real estate offers stability and tangible assets. It's a question that has sparked countless debates and fueled endless speculation. Financial experts, economists, and everyday investors all have their opinions, often influenced by personal experiences and market conditions. On one hand, stocks represent ownership in companies, offering the potential for growth and dividends. The stock market is dynamic, with opportunities for substantial gains, especially in a bullish market. On the other hand, real estate provides tangible assets with the allure of steady cash flow and appreciation. Real estate investments can offer rental income and tax benefits, making them attractive for long-term wealth building. The truth is, there's no one-size-fits-all answer. Each investment type has its own set of risks and rewards, and the best choice often depends on individual circumstances. The best investment strategy depends on individual circumstances, risk tolerance, and financial goals. A diversified portfolio that includes both stocks and real estate can often provide a balanced approach. However, understanding the perspectives of successful investors can provide valuable insights to guide your own decisions. Learning from their experiences and strategies can help you navigate the complexities of investing. One such investor who has made his stance abundantly clear is Robert Kiyosaki, the renowned author of Rich Dad, Poor Dad. Kiyosaki advocates for real estate as a key component of financial independence, emphasizing the importance of cash flow and asset accumulation. Meet Robert Kiyosaki, the maverick of money. Known for his bold ideas and unorthodox approach to financial education, Kiyosaki has become a household name in the world of personal finance. Robert Kiyosaki is not your typical financial guru. Unlike many others, he doesn't just preach about saving money or cutting expenses. Instead, he focuses on building wealth through smart investments and financial education. He doesn't mince words, and he's not afraid to challenge conventional wisdom. Kiyosaki often speaks out against traditional financial advice, urging people to think differently about money and investing. His book, Rich Dad, Poor Dad, has sold millions of copies worldwide, shaking up the world of personal finance with its unconventional approach to money and wealth. The book contrasts the financial philosophies of his two dads, his real father and the father of his best friend, offering unique insights into financial independence. Kiyosaki's core message is simple yet profound. It's not how much money you make, but how much money you keep and how hard it works for you that determines your financial success. He emphasizes the importance of financial education and investing in assets that generate passive income. Kiyosaki's own journey to financial freedom is a testament to the power of his teachings. He has shared his experiences and lessons learned through his books, seminars, and workshops, inspiring millions to take control of their financial future. From humble beginnings, he built a multi-million-dollar empire through savvy investments, primarily in real estate. His ability to identify lucrative opportunities and take calculated risks has been key to his success. His experiences, both successes and failures, have shaped his investment philosophy and made him a vocal advocate for financial literacy. Kiyosaki continues to educate and mentor individuals, helping them achieve financial independence and success. Kiyosaki's verdict. Why real estate reigns supreme. When it comes to the stocks versus real estate debate, Robert Kiyosaki doesn't hesitate to declare his allegiance real estate. He firmly believes that real estate offers greater control, security, and wealth-building potential compared to the often volatile stock market. This stance, while controversial to some, is deeply rooted in his personal experiences and investment principles. Kiyosaki argues that real estate is a more tangible and understandable investment for most people. You're investing in a physical asset, a piece of land, a house, an apartment building, something you can see, touch, and improve. This tangibility, he believes, provides a level of psychological comfort and control that is often lacking in the abstract world of stocks. Control your destiny. The power of tangible assets. Tangible assets, like real estate, offer a unique sense of security and control that intangible assets simply cannot match. When you hold the keys to a property, you hold the keys to your financial future. One of Kiyosaki's central arguments for real estate lies in the control it affords investors. He emphasizes that real estate is not just about owning property, it's about having the power to make decisions that directly impact your financial outcomes. Unlike stocks, where your fate is tied to the performance of a company and the whims of the market, real estate empowers you to take charge of your investment. In the stock market, you are often at the mercy of external factors beyond your control, but with real estate, you can actively manage and influence your investment. You can increase the value of your property through renovations, upgrades, and smart management. This hands-on approach allows you to directly enhance the worth of your asset, making it a more rewarding and fulfilling investment. You decide when to buy, when to sell, and how much rent to charge. This autonomy means you can strategize based on market conditions and your personal financial goals, giving you a tailored approach to wealth building. This level of control extends beyond the physical asset itself. It encompasses financial strategies, tenant relationships, and even the timing of your investments. You are the architect of your financial destiny. With real estate, you have more influence over your cash flow. You can set rental rates, choose tenants, and manage expenses in a way that maximizes your income and minimizes your risks. You can adjust rents to keep pace with inflation, and you can choose to hold on to a property for long-term appreciation or sell it for a quick profit. This flexibility allows you to adapt to changing economic conditions and personal financial needs. This flexibility and direct control over your investment are key advantages that Kiyosaki believes set real estate apart from stocks. By having a tangible asset that you can see, touch, and manage, you gain a sense of empowerment and stability that is often lacking in other forms of investment. The allure of cash flow building wealth through rental income. For Kiyosaki, cash flow is king. He stresses the importance of building passive income streams, money that flows into your pocket without requiring constant work. Rental properties, he argues, are a prime example of this principle in action. Every month, tenants pay rent, providing a steady stream of income that can grow over time. This consistent cash flow provides financial security and stability, allowing you to weather economic downturns and pursue other opportunities. Moreover, as you pay down your mortgage, your equity in the property grows, further increasing your net worth. This combination of passive income and long-term appreciation makes real estate a powerful engine for wealth creation. Tax advantages. Keeping more of your hard-earned money. The government understands the importance of real estate investment, and it shows in the tax code. Real estate offers numerous tax advantages that can significantly reduce your tax burden and boost your bottom line. From deductions for mortgage interest and property taxes to depreciation write-offs, the tax benefits of real estate investment are substantial. Kiyosaki emphasizes the importance of understanding and leveraging these tax advantages to maximize your returns. By working with a knowledgeable tax professional, you can structure your real estate investments in a way that minimizes your tax liability and allows you to keep more of your hard-earned money. Leverage. Amplifying returns with OPM. One of the most powerful tools in a real estate investor's arsenal is leverage, the ability to use borrowed money to amplify returns. By securing a mortgage, you can control a large asset with a relatively small down payment. This allows you to multiply your potential gains as any appreciation in the property's value is magnified by the leverage you've employed. Kiyosaki is a strong proponent of using OPM, other people's money, to build wealth. He argues that leverage, when used responsibly, can significantly accelerate your path to financial freedom. However, it's crucial to remember that leverage is a double-edged sword. While it can amplify gains, it can also magnify losses. Therefore, it's essential to approach leverage with caution and a solid understanding of the risks involved. Navigating the risks. Real estate's potential pitfalls. While Kiyosaki is a staunch advocate for real estate, he's not blind to the risks involved. Like any investment, real estate comes with its share of potential pitfalls. Market fluctuations, unexpected repairs, and problematic tenants can all impact your returns. One of the primary risks associated with real estate is its lack of liquidity. Unlike stocks, which can be bought and sold with relative ease, real estate is not as easily converted to cash. Selling a property takes time, effort, and often significant expenses. Moreover, real estate markets can be cyclical, and property values can decline during economic downturns. The final word, charting your own investment course. Robert Kiyosaki's insights into the world of real estate investing are both compelling and thought-provoking. His emphasis on control, cash flow, and tax advantages highlights the unique benefits that real estate can offer. However, it's essential to remember that Kiyosaki's perspective is just that, his perspective. The best investment strategy for you depends on your individual circumstances, risk tolerance, and financial goals. Before making any investment decisions, it's crucial to conduct thorough research, seek advice from qualified professionals, and carefully consider your own financial situation. Whether you ultimately choose to invest in stocks, real estate, or a combination of both, the key is to make informed decisions that align with your long-term financial objectives. If you found this video helpful, don't forget to subscribe to the channel for more content like this. Thanks for watching, and I'll see you in the next video.